Okay, welcome to the Aramir Trading Group 1 meeting. Today is the 22nd of February, 2021. So welcome everyone. If you're new, welcome. I think I had a phone call from Andre. He's not here yet. He's in Hawaii, but he just joined our community and he was going to attend today. So if you're new, welcome. This is a trading group for new and experienced traders, mostly experienced ones, but primarily options, but we do futures and Forex here. So whatever you want to talk about. And first up, I think Iggy and I actually spent some time this weekend uploading his open positions into the expert backend. So now that's all current, and the results are actually pretty good. So welcome, Iggy. I hear you.
Hello, Tom. Welcome, everybody. Yes, we updated all the records now, and will try my best. And on Friday, one trade expired, and the next one will expire on the next Friday, and it's looking pretty good. But at the moment, I'm investing a lot of time and research for protecting my systems, and I think I'm on the right way, and I may show some pictures about it.
Oh yeah, I guess I gotta allow sharing. Okay, you can share your screen if you like.
Okay.
And
Do
I
you,
see it. Yep,
do you see anything?
I do.
Okay. So this is the SPY from 2004 to last Friday. And here are my the blue signs is when when in my systems I will cut off the trades because I reach the knockout level. But the most important thing is when do I expect a knockout and can I prepare before it? So what you see it here is the red sign at the top, at the bottom is when I cut all trading, because the here you see a red line, and the red line is the highest high minus a certain percentage, and when I fall below it, then I stop completely trading of all trades. But the interesting thing might be when can I expect a drop and can I get prepared for it. So that's the thing. And what I did is here you see red signs, which are the also the relationship is between here and here is when is the red here above a certain level. And the red means I have here, I do it a little bit bigger, I have here a black line. This black line depends on the highest high minus a certain percentage. And when I cross the the black line here, when I cross the black line here, then I get here a pink signal. You see it here. And after the pink signal, I count the days, how many trading days did happen, and when is the probability of the next drop is higher than it's at the moment. And here you see this is about when the last drop was more than 3 months, then the probability of getting a new drop is higher, simply said. And between the black line between the black line and the SPY, there's another line which is this one here, which is about the middle of these lines. And when I get these lines, I try to get prepared for such a break when I cross this line to the downside. And at the moment, I'm doing some back tests for what to do with the different trades, because I'm trading 6 options at the same time. And some options I can put in some kind of insurance, and sometimes not, because the older the trade, then I get more insurance, and if there's a new trade, then I have a lot of time value in the trade, so higher volatility will help the trade a little bit. But when the trade is pretty old or getting older, near to expiration, then I'm able to put some insurance in the trade for a better price. Because at the beginning I can also pay for insurance, but it's very expensive. And the longer I wait, the cheaper it gets. So this is what I'm testing at the moment, and all I can say at the moment is we might have a new drop here, but you don't know when, because it can also happen that you have to wait, for example, as you can see it here, 3 years, 1.5 year before there's a big drop. But most of the time, longer than 3 months, the probability is getting much higher. So that's it in a nutshell.
And then the performance page, I guess we ought to show people that because it's pretty good.
Um,
If you go, oh, I can share my screen if you like.
okay.
Let's see, let me pull it up here real quick. Nice to have 3 monitors again. Let's see, share my screen.
And not on the mobile.
This one. Oh, that's a participants window. Okay. All right. So if you go to products and Schwalbe performance, here we go. Now, there were a couple of trades earlier in the year, but we talked about this and you've completely changed the way you're trading now. So originally you were using butterflies and now you're not using them anymore, right?
Yes, that's right. And there are also that has been also only two trades. That was from September, and the next one was in December 2019. And after these two trades, I changed my systems.
And
That
to put this in perspective, I think right now it's $12,000 to trade one of the 6 trades, or it's like $2,000 a trade margin. So a $12,000 account is a unit, and this is 2 units, I think. So
yes,
$4,000.
yes, that's right. Yeah.
So this is on 24,000. So 41. Let me bring up a calculator. Let's see, 41. 40 divided by 24,000. So it's up about 17.25% right now,
Mm-hmm.
which is pretty good. That's for a quarter, basically.
Yeah. And for now on Friday, one trade will expire, and this will have a profit of about 630 about, and that times two, so it's 12,000, more than 12,000. 1200.
Yeah,
12,000, yeah.
that would be nice. Yeah.
1200. And yeah, it expires and it can't make any loss anymore. It's fully protected. And that's what I try to reach, to get fully protected the trades till expiration. And most of the time it works well, but the problem is when there's a drop to the downside, I want to get prepared for it, and that's what I'm working on at the moment.
Comment on the margin, Iggy. I think the margin is more than 2,000 now. It's much more because of the adjustments for risk reduction.
It's span margin, yeah. In reg T margin, it's a different picture. That's right.
Yeah, I think that it would be more fair to show Reg T margin on this page, which would not be 2,000.
Would that be 4,000?
I sometimes I put on a back ratio, and it's a 4 to 5 back ratio, and you are in the area of in reg T margin at about 10,000 for one tranche. But as I have span margin, it doesn't play a role because it's really far out of the money at about 15 to 20%. It depends on where the price is at the moment. And I checked all the lowest low of my current price, and I was never below 1,000. So in span margin, it's a completely different picture.
I think if you're trading futures options in a retirement account, though, they treat it more like Reg T margin. So this probably wouldn't be accurate for a retirement account.
And
You're
it's
not-
definitely not accurate if you're trading SPX instead of futures.
Yeah, you'd have to be doing it in a PM account, I think. 'Cause
I'm trading on span margin A-minis.
yeah, so I think the either you trade it with futures options or a PM account with SPX would be the way to do it. All right, but overall it's looking pretty good. So nice job, Iggy. Are there any other questions? Let me see the chat. Oh, there's some chat stuff. How many people have PM accounts? That's a good question. I don't have an accurate number, but I suspect most people do not. And a lot of people that have larger accounts, that's their retirement account. So probably a smaller percentage of people are trading with PM accounts.
And span margin with A-minis, is it possible in a retirement account?
I know at Interactive Brokers, when I was trading some retirement accounts with future options, their margin was basically Reg T.
Okay.
But if you're trading in a taxable account, then this should be pretty accurate.
I think, I mean, there's a version without any back ratios, because the back ratio pulls you to the downside in Reg T margin dramatically. And I also have a version with without a back ratio, so I may publish it with a Reg T and without the back ratios. I can do that.
Okay, just something to think about. Okay, do you have anything else, Iggy? I don't see any more questions.
No, that's it at the moment, because I'm not ready yet.
Okay, and you're doing 2 trades. Well, I trade every 14 days, and a new one comes on today, right?
Yes, today I will open a new trade and the next one in 14 days. So there's always a space of about 14 days, but expiration is of course only the third Friday and the end of month. And then sometimes it's only a week, and sometimes it's between 14 days and 1 week for
Okay.
expiration. But opening always 14 days after the third Friday on Monday, as today.
All right, sounds good. All right, well, thanks very much. Let's see, I see Dave Thomas is here. Good morning, Dave.
Hey, good morning, Tom.
Hey, do you want to give us an update on the your flex trades, how they're doing?
Sure. I just signed on here, so let's see. I'm trying to figure out how to go to the proper page here to take a look at it. You're saying, should I be sharing something, Tom, or?
If you have something to share, that'd be great.
Well, I'd just be going into the site.
Oh,
I guess if you
well,
just want to.
if you want me to steer, that's fine.
I don't. Yeah, that's fine. Yeah, because I don't have any. We don't have anything live on right now.
Oh, okay. Let's see, where would you like to go? Maybe.
Well, maybe just go to the one where it shows all the trades.
Oh, the trade history.
Yeah.
All right. History. All right, here we go. Does that look about right?
Yeah, I was thinking of the one that showed all the individual trades.
Oh, okay, then I got to do this one.
Oh, there you go.
Yeah. So that's trade by trade. The other one was on a monthly view.
Yeah. This is just this is ever since the start of I guess we started right around the end of November 30th. It looks like. So we've had I don't see, was that 1, 2, 3, 4, 5, 6, 7, 8. It's like 12. So we've done 10 out of 12 trades so far as winners. I think we're up around, it's close to around 20%. Is that correct?
17.91.
There you go. Okay. So it's, it's been pretty repeatable. Typically we've been putting on trades either kind of like on a Monday or a Tuesday. And obviously with the market the way it's been nice not to have to be able to be in, every single day while the market's had these, pretty wild fluctuations. But even with that, we've had to kind of adjust and be a little bit more conservative as compared to when we were back in say December and January, because the RVX and the VIX has definitely been up quite a bit higher within the last month. So we've just had to modify things a little bit, which we've done, and but we've been pretty consistent, and as you can see by the chart there. So our typically the winners lately have been more like around, we've been trying to shoot for around $500 on a weekly basis. Before we were shooting for about 1,000, but that's when the volatilities were down around 28, 29 in the RVX. But right now it's not to say that you couldn't, and I know some people are doing better, some people are doing worse, all depending upon the amount of risk that everybody's taking on an individual trade. But right now it's been going good. I was just before I signed on, I was looking at potential trades to be able to put in towards the end of the day today. The thing that's crazy, Tom, is just the overnight futures and stuff. I mean, they've been all over the place. Have you been seeing the same thing?
Yeah, currency's been moving a lot overnight too, so I'm not sure what's moving the markets.
Yeah, it's pretty crazy. To deal with some of that, we've tried to be a little bit farther away from things and stuff like that, so to be able to try to mitigate some of that risk. So yeah, so it's been going fine. The thing that what it seems like the subscribers have been enjoying as part of it is just the ability to not have to be in every single minute. As a matter of fact, last week we were in the trade for, I think, about 2.5 hours.
Oh, wow.
So we put the trade on right at the end of the day on, let's see, last week was a holiday, right?
Yeah.
Yeah, last week. Yeah, so we put the trade on right at the end of the day on Tuesday, with about a half hour to go. And I think 2.5 hours into the session on the following day, and we were out. So that was, and we didn't go in for the rest of the week because nothing really, the setups didn't look good. So, or
17th was here. Yeah.
Yeah, we had a quick move down on the following day on Wednesday, and so if we would have had, of course, if we would have again stayed in and continued with it, obviously there would have been potential of even more profit. But there's also the thing that, if you remember, somebody has always told us is that if you see a gift, and it's only a gift unless you take it. So our old friend Dan Harvey used to always say that. At least he did to me many years ago.
Oh, Dan's here too. Hey, Dan.
So Dan, we still remember. So
yeah, I'm here. Good morning, guys.
Hey,
Morning.
Dan. I was just reiterating, Dan, something that I think maybe you told me, or definitely told me many moons ago, saying that if you see something in the market where all of a sudden it's every once in a while you get a gift, but it's not a gift unless you take it.
Well, that's very true. Yeah.
So I was explaining that to the trade group last week, where we had that kind of an opportunity where we got up, put a trade on late on Tuesday, and first thing on Wednesday, market happened to just go in the right direction, and it was there. And maybe it wasn't all the way up to the ultimate profit that we would have liked to have got, but we've seen too many times where you're in there and all of a sudden it's there, and within a fleeting moment it's gone. So you have to I've passed on your message to many over the years.
Well, it's good to be nimble, and
Yes.
certainly when it comes to realizing a profit, but also perhaps even more importantly, when things are going against you, it's good not to wait to see how bad things can get.
That's right. Because we know they can get worse
Yes.
within a blink of an eye sometimes. And I've seen sometimes also, it seems like, when everybody when everybody hangs on some either technicals or something, and it seems like, once that support line is broken, or and on the downside at least, once that support has broke, there seems to be if all of a sudden you say, okay, now is the time that, okay, we hit the max loss, we hit this or whatever, now is the time to, get out. To be able to do that, volatility shift very quickly, and the market makers are not willing to fill the orders as quickly, or at least at a decent price. So you find out very quickly that what you thought you could try to maybe get out at is that prescribed max loss is gone, and you're further beyond that. So
That's right. I think that's always a revelation for newer traders that are, they're looking at their hypotheticals, and, it looks as if, well, if I take it out now, I will only lose, we'll say X amount. And then they go in and actually try to place the order, and they're shocked because they're not going to be able to get out anywhere near what they thought. And, particularly if they try to take a complex position out as an entire position. And you and I and Tom all know that sometimes you have to take things out as verticals to get any kind of decent fill at all, because the bid-ask spread just widens out when the volatility pops up and there's fear in the market.
Exactly. So all lessons to be learned over the ages.
Definitely. So Dan, how are your trades going? Are you still just focusing on the shorter term boxcars for the most part?
My trades have been going actually quite well. I'm doing boxcars on the SPX and the RUT. I'm not doing them on stocks. Instead, I'm doing 132 flies. And the only thing new, I guess, is that I have started to do some earnings plays using the 132 flies. And they've actually been working very well. I don't do them the way a lot of people do them in terms of, trying to pin the fly. I go farther out, and I just want to take the credit. And so when I reach about 60-65% of the credit that I took in, I'll close it out and take my money and then rinse and repeat. And they come, there's something to find just about every day. So that's what I've been doing. In fact, I was just now looking at one, and so I have sort of a process of finding these.
Oh, do you mind just running through that real quick?
Yeah, sure. Okay.
Let me stop sharing my screen.
Hey, Dan, can I interject a question before you get into that?
Yeah. Hi, Tim.
Hi, good morning. Anyway, on the boxcars, I've been doing them on SPX and Russell myself lately. In fact, I just opened one on SPX, but it seems like that the percent return on margin for SPX is lower lately than on Russell. Have you noticed that too?
It's a little lower, but I have one. In fact, let me go ahead and share my screen. I think it depends on when you get in and what sort of prices that you get. And so lately, I have been doing all, let's see here, So you should be able to probably see my screen now.
Yeah,
Yeah.
we do.
Yeah, so lately I've been only putting them on down days. And it doesn't have to be a big down day, but for example, here is an SPX, since that's what you were talking about. This is my spreadsheet, and I think I've shown this before. And basically, when I put the trade, the way this calculates, when I put the trade on, I put in the year to date for that underlying at that time. So when I put this on the 10th, I had a previous winner and loser. So, which you can see down here, I had a winner of 585 and a loser of 495. I've only done 2 since the year began. This is the third. So anyway, I put that $50 in, and then the year to date, comes in with an RTD, which you see up there. And then this will calculate the difference. So this one's up 11 to 35, which on margin is 5.3. And so looking at this one, this is not the real money here. The real money is what I just now showed on the spreadsheet, because I'd never, I don't bring in the previous trades, and I've made a couple of adjustments on this. But anyway, this one's low delta and still has a lot of theta, and this is where we are now. And I have a little calendar on here, which I will take off if we go down. It's just a one lot. It just smooths things out a little bit, as everybody knows. So I may try to get another $150, $200, and then I'll take this out. So to answer your question, maybe these are not returning quite as much, because coming down here, let's see, so these are the RUTs that I've done in this same account. This is my spreadsheet to calculate the expected return, by the way. So, so this is done a little better. So I've had 3 winners, 1 loser so far this year. So this is my net, not counting the commissions. I didn't put those in. I usually have this, I guess that's something I need to do, because I usually have a field for the commissions and then calculate it. Anyway, so that's the expected return based on what I've done so far for the RUT, but it has not been that that good for the SPX, although this one will be a good one. I don't know. Did that answer your question, or?
Well, yeah, maybe later, if I show mine, but I'll put them on the graph in approximately the same place on the graph between Russell and the SPX, and dollar for dollar on margin, Russell might be up $500-600, whereas the same relative SPX trade might only be up $200 by my projected exit date. And I just thought that was a little weird, but
well, yeah, and I would agree with you. Normally, I don't do the RUT, but I have noticed, pardon me, basically the same thing that you have, and so I have one RUT in one account, and then I have an SPX in the other account, so that it's easy to keep up with.
Yeah,
I'm not chasing my tail, trying to adjust 2 or 3 different positions, and I'm doing them in a little large or larger size. I do 10 lots.
okay.
Sometimes I'll do a 12 lot, because I only have one trade, and then I don't put on another one until either I close this one out or I'm getting near a close. So I could, for example, put on another SPX now, because I'm going to be closing this one pretty soon, and just take my money.
Yeah. Okay, well, I just wanted to see what you thought about that. And it's probably like Thomas says, it's probably a volatility difference or a volatility change rate difference or something. But
well, and the skew.
and oh yeah, sure, yeah.
Yep.
So anyway, okay, long enough on that. You back to where you were going before I talk.
Yeah, I think I was going to, I think Tom wanted to, did you want to see how I do the earnings butterflies on these things? Was that it?
Yeah, I think that's where we were going.
Yeah, okay. Well, I have sort of an approach here. And the first thing is I use my power options. And these are the criteria that I'm using, and these are sorted by earnings date so that I can see the ones that are popping up. Now I have this under naked put because I'm just, interested in seeing what the put premium would be as a percent of the margin. In other words, the naked put premium. Obviously, it's not going to be naked. So, so I'm looking for something with that the earnings are coming up within a few days. This is looking at expirations going out 15 days, although I usually don't take one that far out, but I will keep it on the list because it may, as it gets a little bit closer, I may put it on. And it needs to be a fairly high volatility range, a reasonable naked yield. It needs to be out of the money, of course. And those are the basic criteria. And then for the list that I use is my standard list, which includes a list of all stocks with weekly options that also have a volume filter. It needs to have a fairly high volume. So this is what is popping up now. I actually have some of these on, so I don't really, I was looking at Zscaler just now because I don't have that one on. I looked at Etsy. It didn't look good. I have a Beyond Meat and I have a CRM, and I just this morning took off my NVIDIA for a profit. But anyway, so these are sorted by the earnings date, which you see over here. So I'm looking for those that the earnings are going to be popping up in a few days. And then this column will give me some suggested put strikes. Obviously, I won't necessarily use those. This gives the naked yield and the option bid. And I want to have a good IV to HV ratio, certainly better than 1, but really better than 1.5. It needs to be a fairly high volatility range because I know I'm going to get some good premium. And it needs a fairly low, well, actually this is critical. It has to be very liquid because of making adjustments if necessary. I don't usually adjust these, but I will do one adjustment and I want to be able to get in and get out. And so I'm not looking for big bucks here. I'm looking for the repeatability, the rinse and repeat factor here. Because sometimes I'm only in these things for 2 or 3 days. I take my money and get out and then find another one. So the one I was looking at this morning was Zscaler. So the next step is I will look at the chart, and I have this, which I bought from Simpler. Well, I didn't actually buy this. I got this one for free because I had purchased some other things, but you can get this from Simpler Trading. And it's a pretty good summary of the earnings dates going back. This is a weekly chart, as you see. And so you can have the number that gapped up, the number that gapped down. You can have the post-release move and the pre-release move. Most of these I'm not going to hold until the possibility of assignment, although on some of them, if I started out with a 132 and it's going against me, I will buy back a ratio spread and I might accept assignment. And as a matter of fact, I have one here on Beyond Meat. This is going against me. So I bought back a 1x2. So now I'm left with 1 short put and 2 longs, and I would accept assignment on this one. So I'll just let this one run down because I will still make a slight profit, you know, if this expires worthless. But most of these, I don't want to take assignment. So I study these numbers, and this has a nice feature here for like the pre-release move. It will give a dollar number in today's market. So that's kind of a nice feature. So I look at that number, and I look at the same thing for the downside. So roughly this thing in the next few days might move somewhere, you know, $25, $35. So I keep that number in mind. And then this is the daily chart. And so obviously it has been moving up. And of course the IV is jacked up, and that's the reason why the premiums are good, because of the run to earnings. Now, a lot of people trade this a little differently. They'll trade these and they'll try to pin the fly, and they're, you know, if they're really good directional traders, they'll try to pin it, and they'll choose a strike that they think that it's going to pin with, based on the technical features of the graph and of the previous moves, like I just now showed, and they'll try to pin it. I don't do that. I place mine out of the money. I'm just going for the credit. I don't want to take a chance on taking assignment unless I can avoid it. So that's my basic approach. And then I was looking at Z-scaler, as I said, and so I think I have an order. I have an order in for that. Yes, I do. So I'll show this. So this is the order that I have in. It's not filled yet. And this is a 2 lot. And the way I set these up is I use the data from the previous moves related to earnings that I just now showed. And then I also look at the expected move. So I would say this is the 26th because the earnings are on the 25th. So we're currently at 216. So I would subtract that, and I'm down here someplace. And then I look at the deltas, and I look at the bid ask. Now this is a little wide. So if I'm filled on this, I will watch this one very carefully. And if it moves against me, of course, it's going to be releasing in just 3 days. But if it were to move against me, I would either close out one of these, leave the other one in, but more likely I would close a ratio spread, meaning I would buy, and I might just do a 1. So I would buy a 1x2, like I did on the CRM. And that keeps me out of trouble. If it looked like it was really going against me, I might buy a 2x4. So that would leave me 2 short and 2 long. And still might not accept assignment on this, although I might. So that's my basic approach on this. And then once I'm filled, again, I'm not filled on this. This is just looking at the prices that I had, which I guess I'm not going to get. But if I use the current price, it would look like this. So see, I wouldn't take it at this price because that's only $136. That, and for a two lot, that is not enough. I need to make at least 150 for a one lot. So I'm looking at, 275 to make a two lot. So anyway, I've been doing quite a few of those, and I can show my results here. Coming down here someplace. Where am I? Okay. Okay, let's see. Okay, here we go. So I started doing these about right here, beginning earlier this month. And so these are this is my win column. And I've only had one loser since I've started doing this. These were other trades up here that I lost. So these are the column headings, not this. These are the column headings. And so I put the losses in as a positive number because that's the way that I calculate the expected return. So based on my trades since the beginning of the year on this, which is partly the earnings plays and partly some other trades that I've made, I've been doing reasonably well with a good win rate here. But what I like is these are all short-term trades. And so it's just rinse and repeat, and the commissions are low. So I'm netting out some real dollars here, which is what I like. And the risk is low because I'm in and I'm out. And I don't allow myself to take a big loss. That's basically it in a nutshell.
It looks pretty good, Dan. There was a question. What was your average days to entry or days to expiration at entry?
I don't actually have an average, but it's going to be about, I would say that it's going to be about a week. It's going to be
pretty
about,
short.
It's about 7 days. And if you're really comfortable, you can put one of these on just a couple days before the earnings are released, and the market makers are going to keep the volatility up, but still, because of the theta decay, even though the volatility has not dropped off like it will following the release, still, generally these will still make money, even though the volatility is still cranked up. So that's the approach that I have. Like I say, other people are going to hold this until the very end, and they base the structure and the placement of their short strike, on the premise that they're going to hold it to the very end and wait for the volatility to completely come out, and then they'll take their profit once the earnings have been released. But that is not the approach that I usually take.
Well, thanks for sharing that, Dan.
Sure, yeah. So I'll stop the share here unless anybody else has any other questions.
I don't see any.
Okay.
And I know you're still doing, like you said, RUT and SPX boxcars.
Yeah, well, okay. So here's okay. So let's see. In this account, I have a RUT, which I just now put on actually. Let me see when I put this on in this account. Okay, I put this on the 18th. And it's already up 150. So far before this, I've already made 1,200 on the RUT. So it's up that, and I'm going to try to get. Let's look at some day steps here. I'm going to try to get somewhere around, 800 and 1,000 on this one. And this is on a margin of 11,000 Reg T. So that's my basic approach. And as you can see here, I have a single lot calendar, which is beginning to, I'll still leave that in because this will bounce around some. So I have a single lot calendar, and then I have laddered my debit spreads, which I think I talked about last time. So I have 2 of them that were placed fairly close to the money when I put this on. And then I have 3 of them which are farther out of the money. They're cheaper. And when I'm setting this up, this is against a 10 lot credit spread. And when I set this up, I'm looking for the smoothness of the T+0 line. I'm looking at the day step curves to be able to assess my relative risk. And I'm also looking at the profit potential. So these have been working very well for me, actually.
So that's
But
essentially a typical entry of what it would look like.
that is a typical entry, yeah, because I haven't made any adjustments on this. This is a typical entry. But the key thing is I wait until there's a down day. That you're going to get your best premium, number one. I mean, obviously, because the vols are jacked up, but even more importantly, perhaps, unless the market continues to drop like a stone, there's going to be some reversion to the mean, as we all know, like is what is happening now with the RUT. That will substantially reduce your risk because your shorts are now way out of the money. So like my short here is 2,100. So I'm way down here. But since I put this on a down day, I'm still able to get some good premium on the shorts.
Looks like there was a question from Rich. He
Hi,
said,
Rich.
for the earnings butterflies, you're looking for stocks that have earnings within a week and weekly options expiring shortly after earnings.
That is correct. Yeah.
Okay. And thank you, he says.
Okie doke.
So you and Lynn doing okay in California?
Yeah, we're doing fine. I had my second vaccination last week, and Lynn is set up to get hers in March.
Okay.
She's younger than I am, so didn't make the first tier.
Didn't make the cut.
Didn't make the cut. Things are getting better in California in general, and in our local community, things are getting better. But of course, still, still vigilant. And most people around here are not averse to wearing masks. It's unusual to see somebody without a mask. In fact, there was a funny episode last week in Santa Cruz, which is just up the road from us. 12 people obviously had gotten together to do this and went into Trader Joe's not wearing masks. And, customers were leaving the store, and the salespeople would not serve them. And so they wound up throwing money on the table, and they were about to walk out the door, and somebody said, "We're not going to take that money, and you're on camera, and this will be shoplifting." And so then this made its way back to the local sheriff's department, and they're going to try to identify those people and prosecute them. So they were doing that either on a lark or to make a stand, or, who knows, they were young people. But the majority of people around here are fairly vigilant and you know, everybody's waiting for things to open up even more, but things are pretty good here.
Yeah, Gabby and I just got back from 10 weeks in Belgium on Thursday, and
Yeah.
it was quite different the way they're handling COVID. All the shops are open a little bit, but the restaurants, bars, cafes are all completely closed. The restaurants do have takeaway, but there's no in restaurant dining.
Hmm.
When you go into the store, you only can have one person from your family at a time. So, we were at Whole Foods yesterday, and there was like a family of four just walking around the store. In Belgium, that wouldn't be allowed, just one person.
Yeah. Well, they're doing things right, and they have experience with this sort of thing, of course. Um, you know, uh, I'm sure most Europeans are very much aware of the bubonic plague
Right.
history, but Americans you tend to be so individualistic, and perhaps not as concerned about the welfare of other people, whereas Europeans, um, not that I live there, but just on my visits there, um, one time to come see you, if you remember.
Yeah,
Um,
we had
but
fun in Paris.
we did. But they tend to be, I think, a little more community oriented and, taking care of each other. And Americans are, but, I mean, Lynn and I have talked about this, in America, just about everyone has accepted that you can't smoke anymore inside a restaurant or a store. And if a store has a sign, no shirt, no shoes, no service, everybody accepts that. But yet many people are basically saying, well, yeah, I'll come into your store and yeah, I will put on a shirt and yeah, I got shoes on, but I'm not wearing a mask. But it's the same thing.
It is.
The store, I mean, it's a private residence. It's a private establishment, and the store has the right to serve you or not serve you. But a lot of Americans just don't seem to get that.
Yeah, I mean, we did see a few people in Belgium with the masks like not worn properly, like not over the nose or something, but for the most part, they all had their masks on.
Yeah.
But it's nice to be home. The restaurants in Colorado Springs are at 50% capacity. We're in a yellow zone now, so
Hmm.
it's quite a change from, when we went to the grocery store in Belgium, I had to wait in the car, and now we can go shopping to get together
Yeah.
again.
Well,
So I'm
just for,
glad that United flight didn't drop anything on you, apparently.
No, that was up in Denver.
Yeah, that was in Denver.
Yeah, we're about an hour south of that.
Yeah.
There's some big pieces of that engine that fell off.
Oh, man.
And I read that there was a similar incident with a United 777 with the same engine, also going to Hawaii in 2018.
They've
Oh,
grounded those now temporarily.
yeah, the parts on that one fell over the Pacific, but
Hmm.
hopefully the NTSB will figure out what actually happened.
Well, let me go ahead and stop this and somebody else can then take over.
well,
Yeah,
Tom,
we're
just as you guys are talking about restaurants and different openings and stuff up here in the state of Washington, where my son works at a restaurant, at a French restaurant, we're at about, I think, 25% capacity, that you can have inside of a restaurant, still seating outdoors. And I think last weekend or the weekend before, I think there is such a huge pent up demand that they literally set sales records, even though they only were at like 1/4 of the capacity.
Really?
And because they were, I think I was talking to my son yesterday, and he said that he had worked like literally from like 11 a.m. to 11 p.m. And the restaurant was completely, as you can be completely full. I mean, it's not completely, it's only at 25%, but it was literally, it held that same rate of people both sitting outside and inside throughout the entire day. So he said it was a big sales day, but he says, you know, for the restaurant, which has been, you know, struggling mightily for the past year, it was very welcome for the owners. It's a very small place, but you know, it's just kind of crazy because it's you know, Deb and I, we're just preparing to head down to California next week for the month of March. So Dan will be we'll be driving sort of by your place on our way to Palm Springs or Palm Desert, and so but you know, I'm feeling a little better just in the sense that I was able to get my second shot last week. So by the time that we leave to head down to Palm Springs, I'll be 2 weeks post second shot. So I'm feeling, you know, at least a little better as far as that's concerned. But you know, there still will be, you know, even at the place that we're renting down there, like normally they would have all kinds of, you know, olive oil and spices and different things held by prior people. And now with COVID, everything is cleaned out. So when you come in, there is nothing there. So you have to kind of bring all your own stuff, even to just, which I'm glad about. But it's, you know, just a little bit of extra planning on bringing some of these other things down to hang out there for the month of March.
You know, you talked about the restaurants, and one of our favorite places to eat in Belgium is a Thai restaurant. And the owner, she said if they didn't have takeaway, they would have had to close because, you know, there's 0% in dine in. So that they kind of hang on that there, but you can definitely see businesses closing in Belgium because, you know, people aren't allowed to shop or eat there.
Yeah, I see a lot of stores right around in downtown Kirkland, which is the same places where I told you where my son works at that restaurant. And right on the main street, there has to be at least a half a dozen different places that were like either gyms or retail establishments, all boarded up, all closed.
Yep. It's sad, but
Yeah,
there we are. And here we are at almost 500,000 COVID deaths in the US now.
Yeah, it went over it yesterday.
Yep.
So well, glad to hear you're back in town, Tom.
Yeah, it feels good to be back. I have to reorient myself. All the trading hours are back to mountain time instead of Central European time. So now instead of having to get up at 7 in the morning to trade the London market, I have to start at 11 o'clock at night. So I think I'm going to switch to the US market again. The time zone traveler. So, all right. Well, I think we're kind of running out of time. Is there anybody else that wants to say anything before we wrap it up? I guess I did have one thing. I got this from Tony Sizemore a long time ago. Can you see the settlement data page? Anybody?
Yeah.
Okay. So this is on resources, settlement data to get here. But Tony used to have this on option elements, and I thought it was good, so I kind of coded it up. But this is, you can see how different things have moved. Like the VIX is interesting over the last 12 months. Here we are last March, it's 69 point whatever, 76. But you can see for the SPX, for instance, the S&P 500, this will calculate what the average change was. This is per month, of course. The maximum, minimum, the standard deviation of those changes, and then the average plus the standard deviation. And then it gives you a range from where it is now of where it'll be in the next month. So kind of interesting data points. But I update this every month and just updated it this weekend. So if you didn't know it was here, it's on resources and settlement data. And then the other thing is I've started automating my Twitter stuff. So if you go to the Twitter page for Airmere, you can see Training Group 1 is popped up an hour ago, and you know, different things I'm publishing. Here's the settlement data. So if you want to get some notifications on Twitter, if you like Twitter, just go to twitter.com/AirmereCorp. So that's basically all I've got. Thanks everyone for participating today. Dan, really like your trades, and glad you have both of your shots now. And
Thanks, Tom.
Dave and Iggy, your trades are both the Flex and the Schwalbe are both looking good. So keep it going. and hope keep everybody happy with the positive results. So good
Thanks,
job.
Tom.
And yeah, thanks for sharing. So we will see everybody next time. And yeah, thanks for coming. See ya.